Frontline indices trade little change, but mid-cap see a significant bounce after yesterday's fall. IT, utilities and healthcare prominent gainers, even as metals and energy drag.
After Ola's promising debut on the bourses, Hero MotoCorp-backed EV maker Ather Energy has filed a draft document with the SEBI to float an IPO. It is planning to raise 3,100 crore rupees via a fresh issue of shares along with an OFS.
The US House of Representatives has passed the Biocure Act, which seeks to curb biotech imports from China over an 8-year period. The move presents an opportunity for Indian pharma to fill the gap. Stocks of likely beneficiaries rally.
The GST Council has cut tax rates on cancer drugs, rationalized rates on snacks to 12%, exempted foreign airlines from GST levy on import of services, and clarifies that PLC in real estate will qualify as construction services. However, proposal on exempting insurance and matter of compensation cess have been referred to panelists for closer examination. Good afternoon. You're watching us here on Halftime Report. I'm Mangala Malu. With me, as always, Ekta Batra. Looking extremely good for the markets. We started a little flattish, then dilly-dallied a little bit from, the red and the green side of the screen. But now, as we speak, the markets picked up pace. Much like yesterday in the second half, where we saw a big recovery from the lows, the recovery has come today as well, but it's come much earlier than what it was yesterday. Once the market crossed that 25,000 mark on the Nifty, we've seen a sharp wave of an up move, and this was led, of course, by a lot of the other stocks than banks. Banks are relative underperformers in today's trading session after outperforming yesterday, and what's doing extremely well and taking your breath away is the mid-cap end of things. The mid-cap index was an underperformer yesterday. Today we have 1,800 stocks advancing for just about 600 stocks which are declining. Ekta, looks good.
Hi, Manglam. Yes, absolutely. So exactly what we saw yesterday is now coming undone. Like you mentioned, we have the mid-cap index, which is in the green and powering ahead with a gain of around 1%. Separately, we have the advanced decline ratio, which is in positive terrain at this point in time. So 2:1 is where it stands on the Bombay Stock Exchange. The other index, which I just want to pull up, is the Nifty FMCG index, because that continues to gain. It was sitting at a record high in yesterday's trading session, so it's building in terms of gains today as well. So do watch out for that. The other sector which is standing out is the entire pharmaceutical/CDMO space. Stocks such as Divi's Labs, Loris, Piramal, all of these stocks are sitting at the best levels that we've seen in 52 weeks or in the past couple of months. So all of them are sitting at fresh highs in today's trading session on the back of that Biosecure Act. But going forward, one of the key things that we will be watching for will be the US inflation data, which comes out on the 11th of September. We'll be reacting to it on the 12th. So that'll be important to watch out for, considering that the US CPI data for the month of August is probably expected to soften to 2.6% versus 2.9% in the month of July. And that'll be an important data point ahead of the September 17th to 18th FOMC meet. But nonetheless, that's on the macros. Let's move forward and talk about specific stocks then. GMR Airports is trading in the green after the company has acquired additional 10% stake in the Delhi International Airport. Vivek is here to tell us more.
Well, that's right. So GMR Airports is in focus. Now, remember, like you mentioned, the company went ahead and informed the exchanges yesterday that the company is going to go ahead and acquire an additional 10% stake in Delhi International Airport. Now, this particular stake acquisition will be from Fraport AG Frankfurt Airport Services, which was a minority stakeholder holding 10%. The stake, at which GMR will be buying, will be valued at close to $126 million, thereby valuing Delhi International Airport Limited at an equity value of close to $1.26 billion. Now remember, post-acquisition, GMR shareholding will rise to 74%, with the remainder 26% being held by Airports Authority of India. Jefferies has written on this particular transaction. Number one, they've done an analysis of the valuations. Like we mentioned, the equity valuation at $1.26 billion, enterprise value of close to $2.9 billion, and they believe the deal has been done at valuations as per the estimate of 17 times FY25 EV to EBITDA and 7 times FY26 EV to EBITDA, which they believe is quite reasonable and fair, similar to the stake purchase that they had done in the Hyderabad International Airport as well. Remember, over 50% of the SOTP valuation or the valuation for GMR airports come from this particular airport itself, which is Delhi International Airport. So they have a target price of 106 rupees a share, and they believe that this is an attractively priced asset purchase as far as GMR airports is concerned.
All right, attractively priced asset purchase, and that reflects in the stock price up around 1% right now after having seen a big move already. But a bunch of stocks which are buzzing around right now. You know, you have United Breweries, which has recovered from the lows, though mildly off the high, still sitting with a mild gain itself. Jubilant Food has, been one of the stocks of the last couple of months. It's seen a big rally of nearly 55% from its 52-week low, currently sitting with a gain of about 2.5% as well. And KOF Forge is the one which is up around 4% as we speak. This, as a brokerage note coming in from Motilal Oswal, has upgraded the stock to a buy rating and a target price a little over 8,000 rupees as well. Rima joins in with more on that one. Rima.
In fact, Motilal Oswal, on the entire IT sector, they're saying that the IT services sector could be on the cusp of a recovery after enduring a prolonged period of discretionary spending cuts. And on KOF Forge, as you said, there is an upgrade to a buy with a target price of 8,100. Now, here are the key reasons why Motilal Oswal is incrementally more bullish. One, their exposure to the BFSI sector should help participate in the upcycle post the interest rate cuts in the US. Second, the strong order book, the wins, etc., position the company well for near-term recovery and near-term growth numbers. Third, there could be upside to the Cigniti acquisition that the company did, as they believe KOF Forge will be able to extract cost synergies earlier than what they were anticipating. So if you look at the margin profile for KOF Forge, according to Motilal Oswal, this year the company could do EBITDA margins of 13.4%, and that could rise to 15% by FY27. So they're valuing KOF Forge at 38 times versus 30 times earlier. But there is one risk that Motilal Oswal highlights. They're saying that Cigniti, the company that they acquired recently, their testing business could get disrupted by generative AI, and that, according to Motilal Oswal, is a medium to long-term threat. And also remember that the stock on a year-to-date basis has underperformed the Nifty IT with a gain of close to about 8%. So that also explains a little bit of that catch-up rally taking place. Back to you.
Okay, all right. Thanks very much for that, Rima. So that's the update coming in on KOF Forge. We'll take a short break, but we'll get you a lot more on the markets and a lot more on specific stocks on the other side. Stay tuned.
Welcome back. Holding well for the Nifty, and the mid-cap index doing a lot better, though there are flashes which will come at the bottom of your screen from the SEBI, and we'll keep an eye out on that developments as they are there. This is the Congress spokesperson saying that the SEBI chief is guilty of willful concealment. We'll obviously get a lot more comments and a lot more nuanced take on all these factors as they play out as well. But this is what a comment has come in from the Congress spokesperson. But let's move to the US Congress. The US House of Representatives on Monday has passed the Biocure Act. And how will this impact the pharmaceutical companies in India? Of course, initial moves are suggesting this would be a positive because we get benefited from it. To what extent and what stocks? Let's go across to Ekta.
Well, yes, important news because the US House of Representatives has passed the much-discussed Biosecure Act, which now heads to the Senate for a vote. Now, the act seeks to reduce American dependence on Chinese biotech companies over the next 8 years and has specifically mentioned 5 Chinese firms, including the likes of WuXi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Labs, Syngene, Loris Labs, Piramal Pharma and Newlin have become focal points of possible beneficiaries. Mostly all the companies have already witnessed increased exploratory discussions, but are still to see conversion to business. However, they do expect possible business over the longer term and expect it to start with smaller projects first. Now, Laurus Labs, for example, anticipates a gradual shift, while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunities. Syngene has said they are participating in pilot projects related to quote-unquote the China switch and seen a 50% rise in requests for proposals in Q1. Divi's Labs say that they are seeing opportunities in phase 2 and phase 3 molecules and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, it would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese and non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis. Well, to talk more about this and the entire pharmaceutical sector, we have Chirag Dagli, who is the fund manager of DSP Healthcare, joining in to discuss the entire space. Chirag, hi, welcome to the show. Well, you've joined us on a day where, all these CDMO stocks are on fire and possible beneficiaries of the US Biosecure Act. So give us a sense in terms of how beneficial do you think the US Biosecure Act would be for Indian CDMOs such as, say, the Divi's and the Syngenes and the Lauruses of the world?
So what has really happened is that, essentially all the big pharma companies are now going to look at least China plus one, having one vendor beyond China. China, as you are aware, is a very large part of the overall ecosystem in pharma. And what's going to happen, and nothing's happening immediately, like you said, nothing happens over the next 12 months. But as you go forward, 1 year, 2 years, 3 years down the line, you see a lot more companies doing, visits to India, trying to cultivate more vendors in India, trying to de-risk away from China. So as we look at the next 3 years, I think nothing happens in year 1. Year 2, you start to see some bit of, revenues come through, and year 3, things really start to pick up. When you think of the opportunity for Indian pharma, clearly Indian pharmaceutical companies have been very strong in custom synthesis capabilities historically. It's evident in the generic presence that we have, and it's now increasingly going to be visible in the custom synthesis business for patented molecules as well.
All right. So, Chirag, you said that obviously nothing happens in the next 12 months, but year 3 is where the opportunity actually starts to show some sort of fruition on ground itself. Would you have any estimate of the size of the opportunity basis what the difference between, say, China's market size is right now versus what India's is, and over the next 3 years, say, the kind of capacities that have been announced already? What could a realistic size of the benefit be, according to you, for the entire industry? And then we drill it down to who benefits in terms of specific sectors.
So custom synthesis manufacturing globally is between $25 and $30 billion. This is basically manufacturing of APIs for innovator pharma companies. So this is anywhere between $25 and $30 billion. The largest player in India is about a $400 to $500 million. So that's the magnitude of opportunity or the gap that we have. So it's a very, very large opportunity, clearly, but it's also a very fragmented industry. And over time, of course, this will get a lot more consolidated, but this process is going to be very gradual. So the opportunity today is almost as big as $25, $30 billion. And the largest out of India is $500 billion.
Okay. But, Chirag, what are the challenges to scaling up and to compete with the Samsungs of the world, coming in from South Korea, as well as the companies which are vying for business from India, from Europe, as well as the US? Do you think that India has the capability, the trust, the technology, the R&D, and the people power to compete on a global scale to get a formidable chunk of the business?
Understood. Look, I think Samsungs of the world play in the biologics manufacturing. It's a little different than the chemical manufacturing, which India has been doing for a very, very long time. In the chemical manufacturing process, clearly India has substantial strengths and expect us to do extremely well in that chemical custom synthesis manufacturing piece. On biologics, I think still early days for Indian pharma companies and lots to learn for us and big steps being taken by many companies. But I think still early to say that in biotech, India can be substantially bigger than some of the global players. But in the
That's
chemical
exactly where
clearly where.
Correct. Chemical manufacturing, we know that we have that prowess, but that's exactly what I wanted to drill down on. Biological manufacturing, the biotech companies, and do you think we can compete with them? And is that an opportunity for India when it comes to outsourcing?
So on biologics, still early days, like I said, Ekta, still early days. A lot of work needs to happen. The manufacturing technology itself in biologics manufacturing is also going through a little bit of a upgrade. So 10, 15 years back, large bioreactors were the order of the day, and which is where the Koreans took a big leap. Now, increasingly, a lot of the biotech manufacturing is happening on the disposable reactors, where smaller sizes can also, smaller sized batches can also be equally competitive. So, little bit of, still early days, I would say, for Indians to compete in the biologics manufacturing, biotech manufacturing piece.
All right. So if we had to drill it down, who would be the immediate beneficiaries and who would be the biggest beneficiaries?
Tough to take names, but the list is out there. Most of the chemical manufacturing, most of the API, manufacturing for the innovator companies will stand to benefit because look, I think there's going to be a lot of work that's going to come. Whether some of them get it or not, these are all chances. But we're already seeing companies talk about 2 times jump in the inquiries and the kind of RFPs that they're seeing.
Okay, so Chirag, just before we let you go, when you are making this portfolio now, say you have 100 rupees to spend and allocate within the entire pharmaceutical space, how would you allocate that money? Would it now go towards CDMOs in India? Would it go towards your pure play generics? Would it go towards the Indian domestic manufacturers? How exactly would you spread it out?
So I'd say have all of them. Each of them have their own story to tell. Clearly today, CDMO players are flavor of the season. In some time, maybe Indian generics will be flavor of the season. A couple of years back, US generics were, or maybe 12 months back, US generics were flavor of the season. Portfolio should never be skewed towards one particular, aspect. But we see opportunity in each of the sub-segments within.
But which one do you see the biggest opportunity?
All of them is a great answer, but resources aren't unlimited. So say, for instance, one had 100, how would you allocate it among all the sectors that Ekta just spoke about in terms of percentages?
So I'd say probably about 10-15% in CDMO, which is today the flavor of the season. About 25% in India pharma formulation manufacturing. About 25% in export manufacturing, export formulations manufacturing, and then about 5-10% in generic APIs, and then diagnostics and hospitals.
Okay, all right. And has that risen, that 10 to 15% allocation to CDMOs, has it risen after the Biosecure Act, or was it always 10 to 15%?
From 5 to 10 to, let's say, 10 to 15 is how you should, broadly think about it.
Okay, so that's where you see the incremental opportunity. All right, Chirag, it's been a pleasure talking to you, and quite an opportune day to join in and talk to us as well on the pharmaceutical space. Thanks very much for joining in and speaking with us. So that's the word coming in from Chirag Dhagli. Looks at the pharmaceutical space very closely. As of now, for the markets, there's a bit of a pickup which has taken place for the Nifty, so up around 0.4%. We'll take a break, but up next, we'll get technical. Sachitan and Utekar of Trade Bulls will join in.
Welcome back. You're watching us here on Halftime Report. Good time to check a bunch of stocks which are buzzing around right now. We have Tata Consumer, which has now moved to the high point of trade. A lot of these FMCG stocks doing extremely well. Titan has been one of the big movers over the last month or so, ever since the valuation gap between it and all the others narrowed after the big outperformance that we saw in the second-rung jewelry companies, the likes of Kalyan Jewellers, Senco, and Thangamayil as well. So maybe pull up a one-year comparative chart of Titan and Kalyan Jewellers. You would see the price difference that took place. So Kalyan Jewellers currently under pressure, but the last 1 year has seen a rise of over 200%. And Kalyan and Titan put together would tell you the sort of differential in terms of a price move, and as a result of which the valuation of the two as well. So maybe now the street backing the old horse as against the new one. Let's talk about Hero MotoCorp now. After the success of Ola Electric's IPO, they've gone ahead and looked at perhaps unlocking value in their EV maker business, which is Ather Energy. They've filed a draft document with the SEBI to float an IPO. It's planning to raise about 3,100 crore rupees via fresh issue. Winnie joins in with more details. Winnie.
Good afternoon. So yes, talking about Ather Energy, which is backed by Hero MotoCorp, we're seeing that they have filed a DRHP 3,100 crores will what they will be raising via a fresh issue, and there's an OFS also that will be happening. 2.2 crore shares is what they will be. The promoters, there are some promoters who will be selling share as well. So yes, we're keeping an eye on that. The seller is Tarun Mehta from the promoters, as well as Swapnil Jain on the promoter side, who will be selling shares. Other than that, we have names like Investment, Tiger Global, as well as 3 States Ventures, which are some of the other marquee names that will be selling from the Ather Energy in the Ather Energy OFS as well. Now, mainly where will these proceeds be used? That's the 3,100 crores that they are looking to raise via fresh issue. So yes, that is going to be for mainly an e-two-wheeler vehicle factory that is going to be focusing mainly in the state of Maharashtra. 927 crores is what the amount will be spent for this. Other than that, we'll see a repayment of that will be making of around 378 crores. Investment is going to be in research and development of 750 crores. So clear focus that they want to make in terms of expanding their facility, as well as research and development is the key focus area for the company. Let's not forget, Ola Electric managed to see a very good bumper listing as well. So it seems like that value unlocking is something that will turn out for Hero MotoCorp. Financials, yes, loss continues to see a furthermore expansion. The losses are increasing for the company. And when you look at it in terms of the loss for Ather Energy, the loss is at around 1,059 crores, I beg your pardon, in FY24 versus 864 crore loss in FY23. Revenues have remained quite flattish on a year-on-year basis, FY24 versus FY23. While market share, yes, a slight bit of an increase is what we're seeing. So that's interesting to watch out for there. Versus peers like Ola Electric, yes, still the revenue is much lower. So growth expansion possibility is quite high for Ather Energy as well, given that the focus for the country is also moving more towards EV and e-two-wheeler vehicles is something that we're focusing on.
All right, Vinny, thanks a lot for that. So that's about Ather Energy and a possible value unlocking for Hero Moto on that. Just keep an eye on the market though. A 100-point bump up is what we're seeing on the Nifty. Perfect time to get you all the updates from the F&O space as it plays out at midday. Nifty, Nifty Bank and the mid-cap index, all 3 indices come up for you. The Nifty is at a fresh high of the day, 25,050, sitting above those levels. A lot of call writers at 25,000 may unwind their positions as we stay above that 25,000 mark for an extended period of time. So that's something that remains to be seen. What also remains to be seen is whether the Nifty Bank comes back to the party or not. It was outperforming yesterday, a mild underperformer in today's trading session. What's definitely come to the party is the mid-cap index. After an underperformance yesterday and a late recovery, we are seeing it, do well right from the word go. And those lines extremely parallel, and the green much above the red one. 1,800 stocks advancing for just about 600 stocks which are declining. The Nifty, after having conquered the 20-day moving average yesterday and moved much higher, continues to do well. And now, for the very near term, the 24,850 mark, which is the 20-day moving average, remains an important support to watch out for. It is the Nifty Bank which needs to cross the 50-day moving average, because yesterday it did cross the 20-day moving average, 50,910. Where is it right now? 51,200 thereabouts. So 200 points from here is a bit of a resistance for the Nifty Bank. So if it does cross that, then maybe we will see further short covering on that index as well. all of that would mean that the financial services index would be in focus, because 23,700 call and 23,500 put for the financial services index, which is currently at around 23,650, plays out its weekly options expiry today. So that's the range that the street is playing for. For the Nifty, like I pointed out, 25,000, which remained a psychological resistance, has seen some call writing at a premium of 100 rupees. So if it stays above that 25,050 to 25,100 mark, maybe these call writers will feel the jitters and cover their positions. And we are also seeing some short covering in the 24,900 call already. So that's a good sign. 24,900 put writers, on the other hand, have seen some writing. And for a premium of 50 rupees, it coincides with the support that we are expecting at that 24,850 mark, which is the 20-day moving average. A lot of long positions added on pharmaceutical names. Ekta has been talking about the Biocure Act. Look at Divi's Labs, IPCA, a lot of long positions out there. And GNFC is one stock that I'll keep an eye out on, may perhaps enter F&O ban, given the open interest activity in it hovering around that 95% mark of market-wide position limits. Okay,
all right. So that's the update on the F&O space. Thanks, Mangalam, for that. We have Sachitanan Utikar joining in from Trade Bulls to tell us what he's strategizing today. Sachitanan, welcome to the show. Well, it's definitely a very lively market and a lot of sectors to choose from in terms of, what one wants to probably look at. But what would your approach be? Would you look at the frontliners, which is the Nifty, or would you look at the mid-caps, which are bouncing back?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, I think the Nifty is in strong hands now. If you look at the overall setup, we have the Nifty Bank and Nifty IT both contributing from the front. So far, yesterday we saw the Nifty reconquering the support at around 24,840, which is its 20-day exponential moving average support. And today it is challenging, for a close above its 5-day exponential moving average, which is placed somewhere close to around 25,030. So we are seeing some phases or final phases of consolidation before this particular trend breaks out on the higher side. We are optimistic and we are believing that the 24,800 support may not be breached, and we may see the Nifty again scaling back towards that 25,300, 350 kind of a zone. So we are optimistic when it comes to Nifty, especially when we have both the Nifty IT and Nifty Bank again leading from the front. When it comes to Nifty Bank, yesterday we saw a very strong piercing line formation on the daily chart. The range at around 51,000 on the lower side was defended well. Even in today's trading session, we are seeing a very strong hold of this particular support at 51,000. And on the higher side, the headroom remains open right up to 51,800 for this particular week. So I think the major contribution has already been started from Nifty Bank yesterday, and we see that this particular flow continues, and that's why we believe that the equation is right to deploy some aggressive long positions in both the indices, keeping a flow somewhere close to around 51,120 on a closing basis. There are good opportunities presented by Nifty Bank for a positional target of around 51,840.
Okay, and specific stocks?
Well, on the stocks front, I think Infosys from the Nifty IT pack is showing very strong signs of short covering rally. The stock has already started displaying a very strong pullback on its 60-minute scale. We have its RSI now trending above 50. And the way the data is shaped up, we yesterday saw again the level of around 1900 getting defended well. So this is where we believe that the momentum that has been seen in today's session may continue towards 1965. Eventually, we see Infosys scaling towards that 2000 mark, and that's why we are recommending building long positions here in Infosys futures, keeping a stop loss at 1910 on a closing basis. The immediate target is placed at around 1965, but eventually we see it scaling towards 2000. The second stock on our radar has been IndusInd Bank. Now, the stock has already displayed a strong recovery last few weeks. If you look at the overall structure, the structure on the weekly chart has been improving. There's a declining wedge formation which has matured. The stock is again scaling towards its 200-day exponential moving average. We are expecting that there could be a strong breakout in this particular counter again, which may lead the stock towards 1530 eventually. And that's why we are recommending building long positions in IndusInd Bank futures as well, keeping a stop loss at 1410.
All right, take that point, Sachi. Thank you so much for joining in. And as you speak, the ticker team tells us that a bunch of these Adani Group stocks are seeing sharp spikes in trade, sharply off lows for Adani Power, Adani Enterprises, Adani Adani Energy Solutions as well. All of them have moved towards the higher end of today's trading range, some at the high point of trade itself. We'll keep an eye out on all these stocks. Come back on the other side. We'll talk about markets and a lot of these other stocks which are moving around as well. Stay tuned. Welcome back. It's a big surge that we've seen on the Nifty. 100 points has now quickly turned into 133 points. The Nifty is very close to that 25,070 mark, closing in towards that 25,100 mark as well. We've been talking about jewelry stocks and how they've been buzzing. It's also an IPO that has opened today. PN Gadgil's 1100 crore rupee IPO has opened for subscription today. Of the 1100 crores, of course, 850 crores will be a fresh issue, 250 crore will be an offer for sale. At the upper end of the issue price, the company is actually seeking a market cap of 6,500 crore thereabouts, at the higher end of 480 rupees per share as well. Now, this is a Maharashtra-based jewelry company, of which 2/3 of revenue come in just from Pune. They have 36 stores, and at a previous year's revenue of 6,100 crores and a net profit of 150 crores, they're much lower than all the other listed peers as well. So if you look at, Titan, which has 490 stores, Senco, about 165 stores, and Thangamayil itself, which has around 59 stores, compares with PN Gadgil at 36 stores itself. So for its numbers and growth prospects, the company is actually offered at a discount to its peers. So on a trailing basis, they are seeking a valuation of 42 times price to earnings, whereas all the other players on a much higher base are trading at 60 times, 50 times and 29 times 1 year forward earnings. So if the company can grow a lot faster, then maybe the valuations seem a lot attractive. How faster can they grow? Well, we spoke with the management this morning and they did give us FY27 targets. From 6,000 crores last year, they're targeting 10,000 crores in terms of revenue, with 4.4% margins turning into double digit. Also 10% revenue from studded share turns into 15%. That will be aiding margins. And by FY27, they will have 60 stores with a target of 100 to 120 stores over the next 6 years. So the management has spoken about the targets. If they execute it, maybe the street likes it at these valuations. Take a short break, come back, get you more on the markets and a lot of buzzing stocks.
Welcome back. Well, the markets are definitely building in terms of gains. So we have the Nifty, which is at the high point of the day. It's up around 130 odd points. And we have the Bank Nifty, which is up a cool 135 odd points. But the real star of today is the mid-cap index, which is powering ahead with a good advance decline ratio. Just watch out for specific stocks such as Z Entertainment, which is up around 6 odd percent. We have Paytm, which is up around 5 odd percent. And a couple of other stocks such as IREDA, which is making a comeback. So that stock is up around 4.5 odd percent at this point. So lively market. Most of it is in the green as we speak. We need to take a short break on that note, but we'll be back with our commodity segment. Stay tuned.
Welcome back, and joining us on the show now is Mr. Shashi Singh. He is President, All India Rubber Industries Association. Mr. Singh, hi, thank you so much for joining us. To the prices first, and when you look at the global markets, we've seen some support come back because of adverse weather in various growing areas. But for the Indian markets, after those highs that we saw in the first week of September, or the last month for that matter, do not seem to be sustaining.
Yeah, actually, price little bit come down of somewhere around 237 from 240 onwards. I mean, there are certain slowdown in automotive industries. Their stock is quite high. That's why the price will slow down. But it will not go much more than 5 to 7% max.
So you're anticipating prices to decline 5 to 7% even from these current levels?
Yeah.
And what kind of
effect will be seen on October onwards? Yeah.
Okay. That is because the tapping will begin and you will see higher supplies coming into the market.
Correct.
Okay. And you also mentioned about how the automotive demand really seems to be slowing down, and that is because they have enough and more stocks right now. So what is the kind of buying expectation that you have for the last quarter of this year now?
The price, I mean, demand is high. So buying expectation will not be go down, but because they have stock in their inventory is up. So that's why the price reduction seems to be there. Yeah.
Mr. Singh, we usually see that the automotive demand does surge around Diwali and festivals. That is where people start buying as well. So will that demand start to see now? I mean, will that demand start to show now in sense of, yeah?
Yes, of course. In from April 2023 to March 2024, it's 28 million altogether, two-wheeler, four-wheeler, passenger cars. Vehicle GDP, automotive GDP is 7.2% in Indian GDP. So demand is definitely going to high.
And when it comes to Indian markets itself, I do understand that we work in a deficit. We have to depend on imports. So with the international prices slightly higher than what India is doing right now, what kind of availability numbers and import numbers are now you working with?
Import is still there because of non-availability. There is a problem. Many companies, tire companies, requesting government to give some other port also to import duty-free against the export. So this demand also there. So yes, there is a dependency on import. You can't reduce that.
Absolutely. So what is the percentage that India rubber industry see in sense of imports, and what kind of availability are we working with? What kind of Indian production numbers are you working with?
So India current is 8,42,000 ton and requirement is 18,47,000 ton. So 5.5, 5.6 lakhs tons still deficit. So this is the requirement fulfilled by import only.
And with the international markets running slightly higher, do you think the imports could be slightly expensive this time around?
Yes, and there is no choice because you have to import to run the show.
Oh, absolutely. Mr. Singh, when it comes to natural rubber and synthetic rubber, what is the consumption market share as of now?
See, if you consider tire industries, then the number is more on natural rubber. If you go for a non-tire industries, then it will be somewhere around 50%, like 3 lakh tons of natural rubber and 3 lakh tons of synthetic rubber consumed by non-tire industries.
And you also said that 5 to 7% of a decline in rubber prices is what we can anticipate in the next couple of months. Are you also looking at any support numbers by the end of this year, or you think it's going to be here or weaker rubber prices going forward?
No, not going to less than 200 for any coming, So it will be more than 200 rupees only.
All right. All right. So for rubber producers, that isn't really a very good news. But for the rubber consumers, definitely, where you are looking at rubber prices constantly declining from here on as well. Mr. Singh, thank you so much for joining us and throwing light on all of those numbers. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action.